And our next panel is a VC panel, and it's about challenges and opportunities for investing in Central Eastern Europe. I'm actually going to be moderating this panel. And it actually makes sense as I have a new fund that's very small, not on the level of these guys. But we're going to bring everybody up. Come on up. We've got Andreas from e.ventures Capital Partners. We've got Brian from Bessemer Venture Partners. We've got Luciana from Excel, Igor from Intel Capital, and Roman from Russian Partners. Come on up. Let you guys go all the way down, and we got enough. We need one more chair. All the way down, 1, 2, 4, 5. I might be standing. Is there another chair on the other side? Do these guys speak English? Excuse me, guys, I just bumped my head. So, everybody's got mics. We're all set. So let me double check. What's that? We're going to share mics, okay? There's not enough to go around. Are there any other mics? No? Okay, good. So we'll share these. One chair right here. Thank you. Okay, in the audience, just to make sure we understand we're focusing with you guys, raise your hand. How many are entrepreneurs? Okay, how many are entrepreneurs with a startup? Raise your hand. Roughly the same. Okay, how many are investors? Raise your hands. 2, 4, 6. Okay, everybody else that didn't raise their hand, what are you guys doing? Are you sleeping or are you awake? We got some people to laugh. Okay, so in one sentence, what is each of your firm's profile for investing? One sentence.
I think we are a global investor, a true global investor, taking portfolio companies out of the regions, going international, and helping them to develop and to share knowledge among global teams.
Okay.
We've invested in 50 countries. That's 50 countries in the world. So I guess we're fairly global as well. Investing in technology-related companies at almost any stage.
Okay, and just reiterate, that's e.ventures and Intel and
Bessemer Venture Partners. We're global investors in all areas of high technology.
Okay.
Excel Partners, one of the leading venture capital funds investing in software, internet, mobile, anywhere from early stage to growth stage.
We are Russia Partners. We actually underground for 20 years. We have $1.4 billion under management since inception underground, and we're part of bigger Stigler group, New York-based money manager with $10 billion under management.
Excellent, Roman. Sorry to cut you off. I'm really going to be serious. If I say one sentence, it's one sentence. We got 40 minutes, and I want us to have a chat. The next one is, once again, in one sentence. We're going to start with Roman. Why should these startups choose to work with you rather than any other VC?
Because we are smart money and we help our companies beyond the money.
Okay.
Where do I start?
You just put the mic a little closer to you.
I said, where do I start? We've been around for 30 years, have worked with some of the best technology companies, helped them grow to multi-billion-dollar companies, have a lot of sector knowledge, and are always happy to leverage our network to help you grow.
Okay.
When you become a Bessemer portfolio company, you join a family of over 100 leading technology businesses all over the world. And as an entrepreneur, you're on a first call basis with all our CEOs and all our investors.
Yeah, through Intel, you get access to every single decision maker at every single Fortune 500 companies through an extensive Intel relationships with pretty much any major company in the world.
So our partners are experienced entrepreneurs themselves. They've started a lot of large companies and brought them to success. So we like to work with other VCs as well in order to get the best team together. So if you like us and the setup and the entrepreneurial spirit, then we are the right ones.
So sounds like in general it's the portfolio, it's the people that you're going to be working with them, but actually nobody said domain experience in a certain vertical. So is there also a domain, a specific, go ahead Luciana, you want to talk about that?
I think I said that, and at Excel we have a prepared mind approach, which means that certain people really become domain experts, and that's the best way to go.
So is there one or two domains, I mean specifically?
No, it's anything from software, looking at SaaS, looking at big data, or consumer internet, looking at, I don't know, marketplaces, looking at just e-commerce, etc. No, it's numerous sectors.
Okay. Does anybody want to add to that about a domain experience?
No, I mean, Intel obviously is a technology company with a very deep experience in various technology domains. But I want to challenge what you said a little bit.
Good.
Because this is a Central Eastern Europe kind of market, right? And the major question is, should you be a domain focused in this part of the world versus not?
Okay.
And we can maybe have a talk about it.
Sure.
But,
go ahead. What do you think is that?
I don't think you need one
Okay.
at this point of the market yet. I think the market is in the early stage of development. And to be a successful venture capital firm, I think you'll be more successful if you have a wider focus on the key growth areas versus be a domain expertise in one specific area.
So wouldn't you say that some firms have, might be across all verticals, but they might have more marketplaces, or they might have more business-to-business SaaS, or they might have more marketing or ad tech? So I think everybody here is kind of a broad, but even with that, maybe individually, you guys can speak to an example of that. As me as an entrepreneur and others, I would like to work with people I trust, but also somebody that has really deep expertise that I don't have, is kind of where I was going. So you don't think that exists? That's not necessary here because it's so early?
No, I think you should obviously, as investors, only invest in things you understand, right? You probably should not invest in things you don't understand. Well, you can, but probably not going to be a good outcome.
Sure.
And so I think you should have understanding of key segments you invest in. But I think you have, as a VC, or at least in our case, we've tried to put a team together that has that understanding in the wider areas of segments, of sectors, versus saying, we're only going to do enterprise software, or we're only going to do mobility, or we're only going to do consumer internet.
Funny enough, I mean, Igor is right for this time. So I think there's a certain expertise to grow companies in emerging markets, and to really know how to get growth capitals from more mature markets to bring them international. And they are sometimes the same challenges, either you're in Russia, in Ukraine, or in Brazil. And I think some experience growing companies in those conditions, that's a focus.
Okay. Roman, can you talk a little bit about how you've seen the investment landscape in CEE change over the last couple of years, and maybe where you think it's going in the next 2?
It's changed quite a lot.
Yeah.
I will speak to some changes.
Can I ask for some water for the stand here, if anybody is listening on the side? I'm boiling. Go ahead.
We see a lot of angels now in this part of the world doing early stage bets, not technology angels, that they made money somewhere else, for example in real estate or in some trading, and are now very much attracted to do small bets up to 1 million, and really investing in a bunch of companies. And we see several funds which were raised 100% retail, exactly from these people. So that didn't exist like 5 years ago. So that's number one. Number two, we see global funds, and some of them here on this panel, like Excel, Bessemer, and yet they don't have office in this market, but they cover it either from London office or from New York office, and there is usually like go-to partner now, who is responsible for this region. Didn't exist 5 years ago. So that's number two. Number three, we had some successes out of this market. Two largest companies by market cap in IT in Europe are actually from Russia, Mail.ru, Yandex, and success breeds success and attracts money. So we see now more attention, and funds actually attracted to the growth, and this market shows both growth and scale. So it's growing and can be big, and it's big. So finally, we are at that inflection point when we are #1 market in Europe by number of internet users, And now, basic infrastructure is done. PCs, broadband, e-commerce, getting up payments, and now other services and other businesses can be built on top of that. And that serves as a magnet for the funds to come here and capitalize on the time machine investments. You know, what worked in another market, you know, can work here.
Does anybody on the panel, is this still on? Yeah. Does anybody on the panel have comments? It's not on. Can you guys hear me? Is that New Yorker? There you go. Anybody want to add to what Roman was saying there or dig into that? Nobody has additions. So
maybe from the side from the startup companies, because we are investing since 2008. And when we first invested, the community was very quiet. They didn't exchange information at all. The typical startup entrepreneur didn't even tell us a solution. Technical secrets, hiding any kind of business intelligence or know-how was the key question. And over the past years, we feel that the startup community is becoming much more open. Still, there's a long way to go. And if you talk here in the conference, you still see a lot of people who tell you, I have a great business, but I don't tell you what I'm doing, and I'm not telling you what the technology is. And we just don't care then, because we only can evaluate what we know. So I think the openness also in the startup scene has improved substantially, but it's not as far. And secondly, communication skills. If you would like to attract money from Western VCs, you have to communicate in a way they understand you and they are used to in comparison to other startups pitching for the same amount of money. And communication skills, language skills have improved over the past years, but there are still some miles to go.
Okay. It sounds like I'm working again. Does that work? So that was a little strange. Sounds like an echo. Brian, what do you think are the largest obstacles for venture firms to invest in this region, if any?
There are plenty of obstacles in any region. I'll just point out two in particular.
Okay.
Roman's point about the time machine is an interesting one. And I think an interesting change that you've seen in the time machine over the past few years is the speed in which ideas get replicated. So Vent Privé comes along. It takes years before someone does the same thing in the US. Or eBay comes along, and it takes years before you have Alando in Germany. The speed in which ideas that have momentum are replicated in emerging markets has become breathtakingly fast. And so as an entrepreneur, you have to replicate the idea before it's even clear if it's a successful concept or a large concept in a developed market. And so that obvious proven business model arbitrage is not as easy anymore. And that feeds into a second problem that you run into as an entrepreneur, which is figuring out what is my ultimate market size. You may have a business in the US that generates, $50 or $100 million, and that's a pretty good business. But when you do the math, when you take, projected 2016 per capita GDP, and you multiply it by the projected 2016 internet population in Russia, and you compare that to the US projection, you realize that the Russian internet market is maybe a fifth the size of that of the US, if you believe that that's a good proxy. And so, a $50 million business in the US is potentially only a $10 million business in Russia. So I think you really have to think through the market opportunity whenever you're evaluating a new idea.
Yeah, I think just maybe just talking about the barriers, I think one of in my mind, the biggest challenges of investing in this part of the world, as it is true in probably most emerging markets, is exits. And specifically, we still need, in this part of the world, need to work on this culture. You ask how many companies, I don't know, Facebook acquires a year, or Google acquires a year, or Tencent in China acquires a year. It's 40, 50, 100 companies a year. If you ask how many companies Yandex acquires a year, or Mail.ru acquires a year, it's single digits, right? And I think that's probably the key area that needs to develop in this part of the world, is this whole, the funnel. Things is the exits. I think exits are still a major challenge in this part of the world.
What I would add, especially for international funds, I think it's sometimes slightly challenging to identify the really interesting opportunities because there are a few companies, maybe on the internet side, that are getting a lot of hype and that are interesting, but those situations will be very competitive, whereas I'm sure there are a lot of interesting enterprise software companies that don't really do PR and maybe that aren't at these conferences. So finding those opportunities, I think, is slightly challenging, especially if you're an international fund that just travels to Moscow and isn't there full time or to see.
Do you guys think that the comment you made about there's not as many acquirers or opportunities for exits, is that just a time issue in an ecosystem that's growing? Or is there also a cultural issue here that might delay that? Roman, do you have any thoughts on that? Is it just the ecosystem needs time to grow and circle?
Yeah, I think it's both.
Okay.
In US, there is some terminology called internet currency, right? When one company goes public, now they have stock which they can use to acquire the other company. So it's like channel effect. So if companies don't go public here, so it's hard for them to acquire another company here. And private mergers are usually not that easy, not that many. So it's one. And of course, in terms of culture, it's also here, right? Because people in the West, they think like, here's the market, here's opportunity, we're here, here's a gap, we have to somehow close the gap, we're going to do it internally, and here's the company we're going to acquire and fill this gap. And in Russia, entrepreneurs, they usually are thinking, okay, we're going to develop it internally, we're going to do it ourselves, why pay for that, right? So there is a little bit of that also.
I'm a bit more positive or optimistic on this issue. I think it's a timing question. And I mean, we already had 2 exits. We launched or started Darbury and sold it to Groupon. And together with Igor, we had also Sabato in Russia and sold it to Ozone. And I think there's a huge opportunity for CEE entrepreneurs because the market is different. And there's maybe China and Russia, which is quite different from all the other international markets, where it's quite easy for US companies or European companies to go international. But in Russia and maybe in China, local companies have a substantial advantage. And so I think there will be, as more as the market grows, there will be good exit opportunities to international companies who develop the potential of the Russian market and would like to invest. And I think there's also a timing question because first the VCs come and you see on the panel a lot of international investors coming from the US and so on. And after them, the strategic buyers will come. So I think it's a question of time.
So to that point, if it's just a timing, and I don't have as much experience as many of you have, so my gut is that it's a mixture of both, but I think a bigger thing on the timing. So the timing thing here, one thing that I think about is there's so many brilliant developers here working for big development houses, and there's kind of like a tidal wave that could happen in a positive way. That all of a sudden, if there are more business and sales and more entrepreneurs helping that audience, it could almost surpass Berlin and London and the other major centers here in Europe if there's that mentorship. Do you guys agree or disagree on that?
Well, to your point, we did a little investigation. We have about 200 companies in our portfolio in enterprise software space, mostly based in US. And I was really wondering, and we did a little research trying to figure out what percentage of them have R&D resources in this part of the world. And I was just amazed. It's 1 in 4. Of our 200, so 50 companies out of 200 companies in our portfolio have teams in this part of the world doing engineering. Now, they never admit it. You'd never know about it by looking at their website. And it's not just outsourcing. It's in-house development teams, that are based, that just part of the staff is just based here. So to me, that's to your point. Sooner or later, these people are going to spin out, do their own stuff. They have experience working for a startup, and that will help. I think the ecosystem.
Yeah. Roman, do you have extra thoughts just because you know this area so well? Do you have a thought on whether or not it could, in the coming years, surpass the other major centers in Europe as a powerhouse, as the next Silicon Valley of Europe, or what? Let's create a new name as a top tech center in Europe.
I missed it. What's the question?
Could this area, with more exits and more business-savvy entrepreneurs building businesses, could it surpass London and Berlin as far as exits and startup technology growth and be the #1 area of Europe?
It's pretty easy to find good entrepreneur in this market.
Okay.
I mean, it was never a problem. In fact, I would even argue that maybe 10 years ago when I was in Munich, right, in Germany, it was way harder to find entrepreneur in Germany than in Russia. So entrepreneurship here in the blood of the people. Technology entrepreneurship, it's now happening because before people could make money just by buying a real estate and sell it in 3 years, and they call themselves entrepreneurs also, right? So we're talking about technology entrepreneurs. We see now serial entrepreneurs, guys who already made money, sold companies, they come in again, started another company, and again. So basically like second trip they're doing. Few of them, not many, but it started. It started. And I agree with Igor that if big companies coming here, establishing development offices, teaching local to global culture how to do business, then eventually they get some point of reference, what needs to be done, and they spin out, they quit, and they start the company. So it's all positive now. And government, of course, helping out, with taxes, with Skolkovo initiative, that also, helping the ground.
Okay. In order to even help the entrepreneurs even more, kind of tactical as we talked a little bit earlier, what would you say is the best and worst personality trait for an entrepreneur in one word each? So the best in one word that when you talk to entrepreneurs every day and you might look at one and you have different feelings of that's going to be a rock star, that one could learn, or whatever the words are. The best word, and this should help you guys to think about what traits help you succeed. Roman, you want to start on that side?
Yeah, I'm looking for crazy good people.
That's a lot more words. So one word is a positive. Crazy.
Oh, crazy good.
Okay, crazy good. We'll put a hyphen in there. A negative word?
It's crazy bad.
Come on, what does that mean? What does that mean? Seriously, what's more of a personality trait that people understand, that can really understand that as you shouldn't be?
I'm looking for the drive and for motivation.
So what's the negative?
A lot of negatives.
Well, they exist.
A lot of negatives.
Just one. Go, before we move on.
Lack of vision.
Okay, lack of vision. So good, crazy, and lack of vision is a negative. Just think of you guys, when you guys are doing this, we all have traits that we can't control, but when you're talking to investors...
Tenacity and lack of ambition.
Lack of ambition, multiple words again. So one word. We got 3 minutes left. So tenacity is positive, and...
Vision.
Vision is positive.
Hubris.
Hubris. Does everybody know what hubris means? What does hubris mean?
Too much ambition.
Too much ambition. Okay.
I think perseverance. Startups, ups and downs, and so if you have to persevere through downs. And I think a lack of perseverance is the negative.
So the positive is passion, and the negative one is exit orientation.
So we've got a couple extra words. We're going to do it a lot of positive words, and think about those negatives. You don't want to be like those because, one, it might not help you succeed, or could. Two, it'll be harder for these folks to invest in you. The worst way and the best way to get in touch with you to prove that they have an interesting business that you would invest in. One sentence on either side. The best way to get in touch with you to prove it, and the worst way to try to prove it.
Who's starting? The best way, telling me in one sentence the value proposition, why I should use it as a customer, or why the customer they are targeting should use it. And the worst thing is how much time they've spent to develop it and what kind of detailed feature something has, you know, showing that they are not looking at what the solution will lead to, but you know, how much they worked on it. You know, that's not of interest. Keeping the story short. Yeah.
Okay, great.
I think best way, I think it's probably true for all of us, the best way to get in touch with us is through a reference and finding somebody who would recommend and kind of stick their neck out recommending somebody. The worst way that I saw is telling me that you've started 5 companies and I can pick which one I can invest in.
Can you hear me?
Yeah.
Yeah. Best way is to email me. It's just brian@bvp.com with an executive summary or some description of your business. The worst way is to email me without any sort of description of your business.
I agree.
And yeah, Brian, what's the email address?
Is it on? Yeah.
Yeah.
It's just Brian, B-R-I-A-N, at BVP, BessemerVenturePartners.com.
Okay, great.
Seriously, feel free to email.
Great.
I agree. The best way is to send an email. I always read all my emails, even though I might not reply within a week, let's say, but it's ll@excel.com. It's on the internet. Anyone can find it. And the worst way, I'm not sure, just being really pushy and calling all the time and emailing me, oh, have you read this? Have you read this? I guess maybe that's not a great way. But if you email me, I always read all my emails.
The worst way, it's actually submit the presentations to the website. I don't know how many companies you guys invested if somebody just send the presentation to the proposals at excel.com. We probably don't do that. Yet we review them and of course respond. So it should be personalized. You know, best if some successful person, successful founder or entrepreneur recommends you, even better if the person is who we invested before and made money with. That's usually a good recommendation. If LPs, investors in our fund, recommend, we usually pay more attention.
Okay, that's great. Can I just double check with our timer over there? Is that 9 more minutes or 0 minutes? 0, yeah. Okay, guys, thank you very much. That was fantastic. Why don't you give a round of applause for these great VCs? I appreciate it. Hope I wasn't too cruel or aggressive. Thank you, guys.